All right, while we're waiting, let me just get this all set up here. So yeah, we're actually officially in our 15th year, if you can believe it. 15th year. So yes, we're pretty excited about that. All right, and what I'm going to do here, I just got to bring up the YouTube, make sure that everything is all set to go. All right, while we're waiting, let me just get this all set up here. So yeah, we're actually officially in our 15th year. There it is right there. Believe it, 15th year. I think if I hit this button, that should clear that off. There we go. Yeah, so we are in our 15th year of doing this. And you know what they said? First of all, they said we're never going to last, and we said we're never going to last. we thought this is okay. It's never going to last, right? Because it was all on kind of on the lark. We only started teaching people because people were asking for it, and we thought, oh, there'll be a few people that are going to want to know how to trade options. So we showed them a few things, and before we knew it, they grew and grew, and they brought their friends and family and neighbors and associates, and the thing just kind of mushroomed. And what was supposed to be, something that's going to last, we thought maybe we'll go a month or something. It'll fizzle out, right? No big deal. It turned out to be, here we are 15 years later, going stronger than ever with thousands of people online and having taught many thousands of people how to day trade options. It's pretty exciting. So, excuse me. All right, so let's get started here. So, a couple things I want to tell you before we do that. First of all, a little housekeeping. That is that sometimes I get very excited about what we talk about, very passionate, and in doing so, I tend to speak a little bit too fast. If you find that's the case, please just tell me to slow down, or um, you know, or if I get you into any technical jargon that you don't understand, don't worry too much about it. You're not going to miss anything at this point. All right. And if those of you who are obviously experienced traders, and if I start talking about very elementary kind of things, I just going to ask for your indulgence with us on that, because there are a lot of new people online who don't know anything about options, right? A lot of new people online. So, all right, it is. Let's get started here. Let's get the recording going here. Record. Okay. All right, and good evening again. Welcome to DayTradeSPY.com's weekly fireside chat. This is Introduction to Trading Week-In Review, and it is Sunday, May the 12th, 2024. And my name is Hugh, and I'll be your host here tonight. There's a questions box icon on your Zoom dashboard. Please use that, and I am the only one that sees that. All right, I am the only one that sees the comments. So go ahead and say whatever you want. So, and thank you very much for joining us here. A lot of people online here tonight. And I hope that we do address your comments here and get to all your questions here. If you are new here, please let me know that in the questions box as well. Excuse me. Okay. All the comments are coming in here. San Clemente, California. Okay. Let's see. Oxford, Mass, North Carolina, Los Angeles. I appreciate this, especially on those people for those people on the West Coast. I know it's probably cutting into your supper time here around 5, 6 o'clock here. So, Oklahoma, Texas, Traverse City, Michigan. I read an interesting article the other day about a 34-year-old lady, Mike S. Traverse City, Michigan. Um, this lady, some contractors were working on I guess on a store or something, and they noticed this extension cord going up to the sign. There's a big sign. The sign was probably about 4 feet by 8 feet or something, and then there's a door to get into the sign. All right, the sign was on top of the building, and they followed this extension cord, and they discovered this 34-year-old lady was living in there. Homeless lady, but I guess she wasn't homeless. She had a place to live. It was in the sign. And it was big enough to house her along with a computer, and she had a coffee maker and some other stuff in there, and that's where she lived. So I'm not sorry, that's so sure that they left her there, but that's people homeless will find a place to live wherever they can, and feel bad for her, but anyway. And that was in somewhere in Michigan. So, all right, where else here? Denver, Toronto, Wilmington, Illinois, Santa Barbara, California, Florida, Larry R. Collingwood, Ontario, Canada, Fort Wayne, Indiana, Southern California, land of fruits and the nuts. Yes, land of the fruits and the nuts. Lawrence, I love it. Yes, it is a wine country too. All right, Louisiana. A lot of people from California here. Thank you for that, Ray. Ray A says, congratulations, great service. Yes, thank you. Loving your strategy. All 5 days or wins. All right, one more. All right. Okay. All right. I'm an old Russian immigrant living in Wisconsin. Alexei. Okay. Don't see a chat option, just a Q&A. Is that correct? That is correct, Charles. Yes, we don't have a chat option, just a Q&A. Um, and even the Q&A is, I think it's only visible just by myself here. The reason is simple. A lot of people are very shy. They don't want to ask any questions because they're embarrassed. And I've run into this before. It's the funniest thing. A couple of years ago, I actually had somebody after our trading room, then they would ask me a barrage of questions. And I would answer them. And eventually I said to them, listen, you gotta ask these in the trading room. That's where we do this. We can't really kind of go back after the fact and answer all your questions. And we get very busy with a lot of things and a lot of people online. And that's the whole purpose of the trading room, so that you can get in there and ask questions as it goes. And Aaron and I are the only ones that see the questions, so you don't need to be embarrassed or anything. This way we see it in real time. We can answer you right in real time. So, and that is actually true. So we want to make sure nobody ever gets embarrassed or anything like that. Gord, thank you very much. If your daughter has not been to Canada, it's a must. Yes, she actually has some friends in Canada. She's been to Canada many times. She has friends all over the place. So my daughter, interesting. Okay, so by the way, all right, just so you know, this is a casual kind of a Sunday night fireside chat. So don't get bent out of shape if we're not going to teach you how to make $1 million in 3 weeks. You know what I'm saying? But um, what I'm saying here is that so we talk a lot about different things, and I'll get into my kids and how they learn how to trade and stuff in a little bit here. But let's just get back into the session here. If you are new here, let us know. And thank you for letting us know here, Tom J, Charles M, Mike G, a lot of new people here, Mount Dora, Florida, Buzzards Bay, Cape Cod, interesting place there, Arlington, Tennessee, Sutton, Ontario. Where is Sutton, Ontario? Is that kind of like near Ottawa somewhere, Bob? Um, all right, Aaron he may or may not be joining us later on. I'm not really sure. Lonnie is all the way from Australia. What time is it in Australia now, Lonnie? I know depending, of course, on what part of the country you're in. You're probably, what, about 12, 14 hours ahead of us, I'm guessing here. Um, all right, KY new. Okay, yes. New with you. Want to see how you do this. Spy Trade Daily, Jay. Lonnie says 10:09 a.m. So Lonnie, you are you are approximately, what's that, 12, 14 hours ahead of us. Therefore, you will see the market before us. So Lonnie, maybe you can tell us what the market's going to do, so we can at least make some money. That might not make sense? Anyway, that's not that funny, I don't think. Anyway. All right, well, listen, here's the disclaimer. I believe that when you registered for this webinar, you probably saw this and read it word for word, right? I'll give you about 10 seconds to read this. All right. So here we go. I'll just be quiet while you read through this disclaimer. All right. I believe your 10 seconds is up. Just know that you are responsible for all your own trading, and past performance does not guarantee future results. All right. There I am, folks, in full living color. Beautiful sunset behind me. I don't know if you'll be able to see it or not. Gonna see how the lighting is. If the lighting's really not that good, then I'll bring the uh, bring the blinds down, and I think that'll probably help the lighting on my face. Of course, you may not want that. Okay. All right. So my name is Hugh. All right. Been doing this a long time. That other gentleman, you see a picture of him on the right. His name is Aaron. He is our partner in crime here in the trading room every morning, Monday through Friday, and he also does beta tests usually on Friday mornings at about 11 o'clock. And he is scheduled to do workshop on May the 22nd regarding Fibonacci and Andrew's pitchfork. Very exciting. Looking forward to it. Anyway, most of my experience comes from in the trenches. That's not to say I didn't learn anything. I come from the school of hard knocks, where you got kind of beat up and you got to get up and brush yourself off and carry on. I did learn a few things. So okay. Long story short, I'm trying to really condense this because I don't want to kind of draw it out, especially for those who've been here, a few times already. I used to be in corporate America and handed off a lot of my money to my financial advisor, and then when I realized he had blown up about half my account, um, oddly enough, I wasn't on top of the investments. But eventually, I found out that I only had about half the account when I realized it was down about that, and I promptly fired him and realized that, listen, I am the one who is ultimately responsible for my own account. They don't really give a rat's behind about your account. It's true. All right. They use you, they use your money to further their agenda, whatever that is that they are doing. Okay. They are paid by the products that they promote the products. They are paid by the companies that they work for. And their job is to procure funds from you to be able to invest, trade, whatever they do with it. And they throw a few, the few crumbs back to you, and you're happy with oh, I made 8% last year. I should be very happy, or 5% or whatever it is. Meanwhile, they're churning over your money over and over and over and over again. And if you think about it, those big banks, they did not. They did not, build their big buildings and fund their $1 million bonuses because they were so incompetent. I mean, they know what they're doing, and they're very good at what they're doing. Okay, but they're not very generous when it comes back to those grassroots investors that give them the funds to trade. Anyway, long story short, I used to be an internal auditor, so I was obviously comfortable with numbers and I knew a little bit about risk. So I thought, you know what? I obviously have to learn how to do this myself, and I am going to learn this. I think what was most motivating for me was that my kids at that time, when I'd blown up half my account, I realized that my kids' education is in peril, and they may not end up going to the schools that they want if they're to pursue an education of higher learning, and therefore I will be forever sorry that that happened. So I set out. I actually accepted the fact that I personally maybe pouring coffee in my 80s and 90s if the local coffee shop would allow me. But I will be damned if my kids' education is going to suffer. And I set out to for the goal of learning how to trade because I knew there was money in this business. I knew it. And I learned a lot from the trenches, deep in the trenches. I took all these courses. I learned a lot of obviously the mechanics of things, but there's a lot of things they don't teach you in a lot of those courses out there. I don't know if they still don't. I haven't looked at those courses obviously for many years. I don't follow anybody. In fact, they follow us, a lot of them. And but the things that I teach, I use myself every day. I trade what I teach. I teach what I trade, and we make money. And those people who are with us, especially those who've been with us a long time, they make a lot of money. They do very well with us. And all those things that I learned, all right, I pass on to you. I don't hold anything back. I've got no reason to. I remember that I was there myself. And if I can cut your learning curve as much as possible, that's my goal because it's not easy. And in today's environment, it's especially not easy because we live in a clown world in so many levels, and I don't even want to get into that. But if many of you still have a job, I think you understand what a job means. Job means just over broke. Um, and you can have career jobs with firms, and when they find somebody younger who can do it faster, cheaper, better, you're gone. There's no loyalty, there's no company loyalty, there's no employee loyalty, there's none of that. I think COVID taught us all that too, right? So anyway, I teach, and I've been teaching this now since 2010. So we are now, here it is, May the 12th, officially in our 15th year of doing this. Not bad for a short-term part-time gig, right? But anyway, so what I do is I combine fundamentals with technicals. That's what I do, and I look at small breakouts, daily breakouts, and I aim for small gains, multiple times a day, in and out, in and out, in and out. To me, a long-term trade is to the end of the day. Ultra long term, I guess, would be into tomorrow, but I prefer not to if I don't have to. And and I also want to mention that I've been told that I'm better looking than Aaron. I am 69, so, my hair is starting to recede a little bit. That comes from having kids. So I want to tell you a little bit about that. Okay, my kids. I got a son and a daughter. They both graduates, and they do their own thing, engineering and marketing and that. And it's funny because they both know how to trade. And so my daughter, she's not a world traveler. She never used to be. At least we used to kid about her. Let's say growing up in Western New York area, if she was to go see friends in Rochester, which is an hour down the street, we'd kid her, say, Alexis, who's your travel agent? You're planning all this, and she'd plan for days to go down and see her friends and stuff. But so when she announced that she wants to move to Thailand for a year to teach English as a second language, uh, honestly, I didn't believe her until I was driving her to the airport. And there she is, tickets in hand. See, Dad, I'm going. And I thought, oh, you are, aren't you? Oh my gosh, this is unbelievable. A whole new culture, new language, new everything, everything. And she loved it. She absolutely loved it. And she made a lot of great friends there and stuff. And she would travel around in that part of the world. And I'd always ask her, Alexis, how are you for money? Do you need money? She said, no, Dad. If I need money, I just go to SPY. I trade SPY options. The American dollar goes far down here. I don't need to make a lot to take some side trips to, Vietnam or Myanmar or wherever she's going. I thought, oh my gosh. So look at this hair, folks. Okay, there used to be brown and lots of it. So when she went to Thailand and came back, then it turned white or gray. And then she announced she's going to go to Peru and do the same thing. No, no, please tell me you're kidding. Of course, I'm thinking here Escobar and all these drug lords and stuff here at Peru. Like, oh my gosh. Anyway, she loved that too. And then, of course, when she came back after a year, I lost much of my hair. So don't believe when they say that it's old age that does it. It's not. It's having kids that have that kind of what's the word that I'm looking for? That and I don't want to say bohemian lifestyle. That's not it at all. She's very responsible and very determined in her career goals and whatnot. But they don't have any fear today. I mean, I remember growing up and we never did that kind of stuff. At best we would travel across the country or something, get an old beat up Volkswagen and say, okay, buddies, a couple buddies, let's go, but none of this traveling around the world stuff that they do. But they're very, very well traveled and like you say, she's got friends literally around the world and they talk all the time and stuff. In fact, she's going back to Europe, I think, in the summer for 3 weeks or something. So anyway, that's my story. Now, Aaron, now he's not on tonight. And gave him the day off. But he opened his first trading account when he was just in high school. When all the other kids, all his buddies were out there playing sports and football and baseball, whatever they were doing, and chasing girls, you'd find Aaron in the library, flipping through financial magazines and Wall Street Journal and this kind of stuff. And he learned how to be a technical analyst in his early years. And he used to be a technical analyst for a $150 million commodity fund. That's before we scooped him up. He identifies these high probability trades, sometimes a little further out than just the day, but usually his predictions come true and incredibly, incredibly well. So I like to say he's smarter than I am. Anyway, a great guy, very, very likable guy. So that's who we are. All right. I want to mention to you, we have a newsletter. If you have not yet subscribed, please do. It's called Spy on the Market. It comes out every Thursday. Every Thursday morning, it lands in your inbox. Okay. I write this thing and I've been told it's very entertaining, informative, a nice quick read, basically a 2-3 minute read, very light, relevant, right? We talk about things entertaining, and all you have to do is subscribe is just go to daytradespy.com and you'll see over there on the just leave your name and in the in one of the the subscriptions of that you have if you want to download, say an ebook or whatever. As soon as you leave your name, they kind of put you on the spy on the market. You can always cancel, not a problem. And this week we're going to be talking about trade small, trade often. That is going to be the topic this week, and it's called Spy on the Market. And this is what I was saying here. Just go to the website, DayTradeSPY.com, leave your name and email address here, get the free report now. Our tips, tricks, and traps from the trenches. We give you 7 top tips, tricks, and traps, and there's a lot of good stuff here. Or you can go on one of these sections on the right side as well, the daily payout plan and whatever. Just leave us your email address, and that will put you on the list for the Spy on the Market newsletter. So tonight we're going to talk a little bit about review of last week, preview of next week. Going to give you a little 2-minute tutorial, answer some questions, and show you how we can help you become an outstanding, successful, long-term options trader. And for those of you who are new, we're going to give you a bit of an options primer, because I know that this can be a very confusing kind of a program, and if you're not really familiar with options, I don't want to lose you. You know what I'm saying? I don't want to say, oh my gosh, this guy's getting into technical jargon. I've got no idea what he's talking about. I'm out of here. How do I find out? So just going to give you a very brief, this is not a program here, a session that you're going to become an expert options trader overnight. That's not the way it works. All right, to become successful long-term, you are going to be looking at an extended period of time in which to learn this material and experience everything that you need to get through it. Okay, so week in review. Here's what happened this last week, folks. We're going to quickly go through this because it's not so much important where we've been as much as where we're going. But going back to last Monday, it was a low, no news day, mostly technical trading. By that, I mean support, resistance, trend lines. We look at pivot points. We look at Aaron's deep dive analysis using Fibonacci, Andrew's pitchfork, that sort of thing. Aaron identified that the stock may well go up to that 417 range. That's when it was only hovering around 514, 515. And sure enough, by the end of the day, we hit the 517 level, and I think we did, or was it the early next day? Same thing on Tuesday. Tuesday, the market edged up in pre-market and just bounced around here Tuesday, came back down near the end of the day. But we generally hovered between 517 and 518. Wednesday was rather low news day on all this last week. We didn't really have a lot of news. But it was very range bound. Even into on Wednesday, we kind of hung around some key support and resistance areas for mostly chart patterns. And I'm just kind of show you here. Maybe we can draw in a little thing here. Let me see if I can make this thing work here. Hang on a second here. I just thought of this now. Drawing tools. All right, maybe if I use this blue here. So take a look at this chart pattern right here. All right, that's a left shoulder. There's a head, and there's a right shoulder, and we have other indicators that we follow along with this. We predicted that that based on that, the market might go down, which it did right here, and that was in pre-market. But we also talked about this level of support that we may find, which I believe was somewhere around here. All right, and it's supposed to be a straight line, actually. Very difficult writing a straight line here. I wonder if I can do a straight line. How do I do a straight line? Nope, that's not it. All right, that was a ruler. Okay, let me get back to this. Okay, how do I get off this ruler? I need to get rid of this silly ruler that I punched up here. Okay, there. Look at that. Anyway, I realized that there's a level of support, and the market will probably find some sort of support, and the buyers are going to come back in, which they did, and they pushed the market back up. And there was some technical trading here for the rest of the day. Basically, just kind of trading that narrow range. Anyway, moving along to Thursday, we had higher than forecast unemployment claims, which pushed SPY up to test the 520. So a higher than forecast unemployment claims. What that means is this. Unemployment claims came in higher than what they predicted. And that means that the economy is cooling a little bit, especially the labor market. And inflation, all right, inflation indicators really kind of hinge on that kind of stuff. All right. If um, if the if the economy is really moving quickly and bursting at the seams, that's inflationary, which is a threat to interest rates, and the stock market does not like that. Investors and traders shy away from that. But when you have the other side, when the economy is cooling, investors like that, and the stock market goes up, and that's why the market ran up. On Friday, we had weak consumer sentiment reports. Profit taking also retraced a couple points, came back down, and we actually had a high, I think about a 3 or 4 week high on Friday that we haven't seen in a while. Let's take a look here at seasonal charts. For those not familiar with this, this is a seasonal chart. That blue line you see is where SPY is now, and we only trade SPY, SPY. It's the stock that follows the top 500 stocks. And that red line at the bottom is a composite of the last 5 years closing balance on the daily charts. So let's just kind of zoom in a little bit here and see how this performed last week and going into the next week. We look at the last week, well, we actually dropped about 8 points, but seasonally, SPY rose about 4 points the next week coming up. Is that going to happen again? I don't know for sure, but if you were to say, keep that in the back of your mind that SPY could push back up a little bit here if it follows seasonal patterns, something to keep in mind, okay? So that's the historical level on that. All right, moving along here. What happened last week? Q1 results. All right, a lot of earnings came in here, provided confidence that earnings could grow about 10% this year, supporting market gains. All right, and softening economic growth and labor market, as I mentioned here, gradual slowdown could bring inflation down to 2%. That is the target that the Feds are looking for, and they are aiming at that. And there's been a lot of chatter about that from Fed members that they're still not in any hurry to reduce interest rates yet, not until inflation it's settled in nicely firm, set at that 2% target. S&P extended its gains from May. It's now less than 1% off its all-time record high. And the rebound over the last 3 weeks, assisted by better than expected earnings season. We also have 90% of the S&P 500 companies having reported their earnings, and most of them exceeded on average estimates by 8.5% from last year. So the market is moving along very nicely. Here's a chart courtesy of FactSet, Edward Jones. Looking forward here, the S&P earnings. That's the gold line, and the blue line is the S&P 500. You can see how the earnings and the S&P sort of pretty well matched to what's kind of gone on here throughout the years, and we're still in a very much of an upward trajectory. So that's kind of the way it works. Looking at historical numbers here last week, S&P grew by 1.9%. Year to date, almost 10%. NASDAQ is up almost 9%, and the Dow is up almost 5% year to date. And here we are in the middle of May. According to this model, I mean, we're going to, what do we keep going like this? We're going to hit, what, a 20% rise in S&P over this year. So we'll see what happens. Coming up in the week, we've got another low, no news day on Monday. On Tuesday, all right, a little bit of excitement on Tuesday with a PPI number, Producer Price Index. This is an inflation indicator. And also Fed Chair Powell speaks. Fed Chair Powell will be speaking on Tuesday, and he is going to be speaking, let me see here. I think he's in the Netherlands, actually. Yes, he is speaking at the Netherlands Foreign Bankers Association in Amsterdam. Not sure whether any his comments are going to have any impact, but they generally do, even when he's not talking about interest rates, okay? On Wednesday, we have CPI numbers. All right, CPI numbers coming up on Wednesday, Consumer Price Index. This is a very important indicator that the Feds use to determine what interest rates should do. And there's going to be a series of these numbers, month over month, year over year, core CPI numbers, month over month, which is actually CPI excludes food and energy. So there's a series of numbers, and we're going to see what happens there. Also, retail sales will be reporting here on Wednesday morning, and also Empire State or New York State Manufacturing Index. These are all going to be coming in at about 8:30 in the morning. Thursday, we've got unemployment claims, Philly Fed Manufacturing Index, housing starts, building permits, industrial production. A lot of news coming up on Thursday, and back to a low, no news day on Friday. What does this suggest here? Well, earnings also continue. We got about 10% of the companies still to report earnings, as this young lady here is showing us right here on the board. And she's also telling us that volatility could be low on Monday, high on Tuesday through Thursday, and low on Friday. All right, so you want to kind of keep that in mind. What does that mean for us? Well, that means we have best to take some modest gains throughout the week and just kind of take it easy, trade small, trade often, which is actually the topic of this week's Spy in the Market newsletter. Okay, Spy in the Market newsletter. You'll want to make sure that you get in on that one. So, all right, what are we going to talk about here now? We have you know what? This is what we do, folks. There's opportunities in the stock market every day. The funny thing is, people say to me sometimes, "Oh, the market didn't move much today. It closed about just 5-10 points off its open." And I say to them, "Look, the market provides opportunities all day. It goes up and down. It's not like it opens and it's a flat line." And it closes, 5 or 10 cents off the opening. Sure, you get that sometimes, but there's opportunities all day. The market vacillates up and down, down and up and down many times during the day, and you can make money going either way with SPY options, right? We show you how to spot them and how to trade them, and isn't that what you want? So I'm just going to give you an example here. I did some personal trades here on Friday. I just did a couple trades in and out, same day trades. Um, now, I mention this every week. I say to you that I'm not really supposed to be trading doctor's orders, high blood pressure and stuff, but I just trade for fun. I just so this I just throw, I'm not going to tell you how many contracts I trade, okay? I don't want to put anybody at in an uncomfortable level at that. But here's what I did on Friday. I picked up 25 cents in 22 minutes here in at 9:34 out at 9:56 on the 523 calls. And this was for next week out. And then I got back in here at 12:15, just got in real quick for another 9-cent gain in just over half an hour. Now, folks, if this had only been 10 contracts, 'cause I know a lot of people start small, maybe 2, 3 contracts, 5 contracts. A lot of people I know start with, say, 10 contracts or whatever. And you can trade as many contracts as you want. Now, I like to use Tasty Trade for these and this is where this screenshot came from. Tasty Trade. It's a real live, real money platform. They don't have a SIM account, so this is real money. And I didn't, like I say, I didn't tell you how many contracts I traded, but what I like about Tasty Trade is that they cap their commissions at only $10. So it's $1 a contract to open a position, 0 to close, plus a couple of cents for exchange fees. But they cap it at $10. So in other words, if you trade 5 contracts, it's $5. 10 contracts, $10. 100 contracts, $10. If you trade 500 contracts, your commission is $10. Can't beat that. You can't touch that. All right. So especially when you consider the benefits that you have with the real broker that you can access. Yes, you can get free brokers, but you can't talk to anybody for when something goes horribly wrong. Not what you want, right? Anyway, if this had only been 10 contracts, trade number one would have picked up $250 on an investment of $3,150. That's a 7.9% gain. My second trade was only $90 on an investment of $34.60. All right, 2.7%. So what? I was only in there for just over half an hour. Folks, that's $350 for the day. And it was a fun thing. It was fun. There was absolutely no sweat, no stress. In my mind, I had no stress and I had fun. My fun factor was high. But even if you take only $340 a day, and I go through this every week here with you. All right. For those people who are here for the first time, join us every week. I kind of go through this sort of exercise every week. And I just kind of show you how much money this could have made if you extrapolate this over the course of a year. So if you if you only earn $340 a day, you're talking about over $88,000 for the year. roughly, right? I mean, what is the average? The average U.S. salary is what, about $53,000 or something. I mean, you're sitting here working for, if you want to call it that, having a little fun here, and this was just into lunch. There were many other opportunities between the opening bell and lunchtime. It's just that I chose these two trades, and if only 10 contracts, you can see I'm in and out fairly quickly. Okay. All right, so I mean, I think that's pretty cool. I think that's pretty cool. Right now, going to get into our 2-minute tutorial. Let's see, it's 8:37. I don't want to keep you much longer than 9 o'clock here. Here's a question. How do I get my Thinkorswim charts to show space on the right so it doesn't roll out to the border? This is a question with some charts. I know a lot of people use Schwab Thinkorswim, and it's very easy. All right, here's what you do. You just put your cursor on the chart, right click on your mouse, go to Style, Settings, and then go to the time axis and set it to whatever you want. I set it to 15. Let me show you. All right. And I just wonder if I actually have the program up. I don't have the program up. I apologize for that. But if you right click, you're going to get this. This is the settings, chart settings. And there's where you want to go. You want to go up here to the top where it says time axis right here, third from the left. Click on time axis, and you're going to get this screen here, okay? And these are smaller screens. I just blew them up here so you can see them easier. And over here it says expansion area. And this would normally, the default would be set to 0. So what that means is your charts are going to end right at the right border. There's no space. I like to have some space so you can extrapolate your lines, your indicators, your pricing, and kind of get a good idea as to where the stock is going to go. But the default is a 0. So you want to put some expansion area here, 15, maybe 20 bars to the right or whatever, that sort of thing. Now, if you want to do this, and I didn't say to the upside or not, but if you want to also expand the borders to the top and the bottom, up here where it says price axis, just to the left of the time axis up at the top here in the top left, click on that. You'll also see a similar kind of an expansion to the top and to the bottom. So if the price is pushing up towards the top border, I'd like to put, say, 10 or 15 or maybe 20% expansion up there. This way I can extend the lines further out and up as I see fit. And that's really all there is to it. It's very easy. Click on apply, OK, and save your charts, and you'll have it. All right, you'll have it. So, all right. So let's get into that fire. It's getting kind of hot in here, isn't it? All right, let's get to some questions, folks. I know we got some questions backed up in here. Bob says, yeah, you can take 5 weeks to teach us how to make a million. That'll be fine. I love this guy. He's in our trading room every day. All right, let me just kind of scroll down here. Where's Aaron these days? Yeah, we gave him a few days off. He needs a little time off. He needs a little time off here. All right. Okay, so here's a question here from Tom. Tom J, I believe he's new. He says, can you please explain the logic for the 6% limit and the 40% stop? The reasoning is not intuitive nor logical to me. Perhaps I don't understand, but it seems to me that the limit should be larger and stop smaller. Okay, so that's a good question. We send out trades, and I'll go over some of the products that we have. And one of them is this thing called the pick of the day. What it is, and I'll go over in details to what this is. So we send out this pick that is designed to be purchased at the market open, 9:30. And we have a target price of a 6% profit target on this trade. And that is designed so that the most novice, newbie, neophyte trader can make a few bucks trading the pick of the day. Now, if you're an experienced trader and you know our system, you know how to make a lot more than 6%, okay? But we want to keep it very, very basic. So the most basic, anybody should be able to get 6%. These are actually high probability trades. So Aaron and I, every morning, we get together, we discuss where do we think the market's going to go? Where's the propensity, up or down? You should be able to, when we give that trade, you should be able to make 6%. All right. And that's pretty basic. Now, if you make 6% a day, you give a point back to the broker for his troubles, for his commission, you have 5% net. If you make 20 of those trades in a month, let's say one trade a day, 20 a day, you should double your money in a month. Is that so bad? 100% in a month? Um, Excuse me while I get a drink of water here. I've been talking all day. Um, and so that's kind of the thinking behind that. Now, those trades generally work out very, very well. And we started so the powers that be, the bosses said you have to have an end to this. And sometimes once in a while you may actually have to hold overnight. And we actually we manage our trades. Now, I don't like to use stop losses myself. I don't use them. We do manage our positions in other ways. I found that a stop doesn't work. But in keeping with the philosophy of, well, people still need an end. So they're expecting, I guess, somebody to step in and say, I'm going to sell my position now. So to be clear, Aaron and I, we are not in the trading room all day. We have the trading room that we do every morning, 9:20 to 10:30 in the morning. And so we might actually have an open position after that, right? If we get into position before, that position might still be open into the afternoon. And so a lot of people might be wondering, well, how come we don't tell you when we're going to get out? Because we might not be watching the market. We'll just put up a sell order and wait it out. And oftentimes too, I will determine for my own trades whether if I'm comfortable holding it overnight, which I sometimes might. Anyway, long story short, we instituted this. Just put a 40% stop loss. This way, if you're uncomfortable with holding it or you don't know how to manage it, at least if you lose a 40% of your equity on that, then you're going to get stopped out, and at least you still have 60% of that capital that you're left with to trade. Since we started instituting that, we have not had to use that 40% stop loss. It had not been invoked, so it seems to be a pretty good measure there. But at least you have some basis that, okay, if the market should go horribly, horribly wrong, at least you have some out, okay? But that's kind of the basis there. But those trades that we give you, they are high probability, so they're going to hit that 6% a lot more than they'll be taken out with a 40% stop. So that's kind of the thinking behind that. So, and thank you very much for that, Tom. I really enjoy your music. Thanks so much. I love your music. People are chiming in. They like the music. Here's another question about the music. What is it with the music? What's the song Loud and Clear? Where do I find that? Well, you can't find it anywhere. We kind of own it. I don't know. I think you can probably still get it. If you go to Shutterstock, you'll have to buy it there. I think it's like 30 some dollars or something. I don't know. And it's done by a group called Life is an Epic Film. Never heard of it. Great song. And thank you all for the congratulations on the 15 years. I see all of that. All right, let's say okay. I'm just then quickly just kind of going through some of these questions. Okay. Okay. All right. So some of these questions here, like Mike G here, an ongoing challenge is open trade timing. Well, all my trades were wins. Congratulations for that. The market changed direction on me and had to wait for the market to reverse and retrace. You say to open during the first 2 minutes, but would like to have a better idea on when to enter after two candles in the right direction. I get FOMO and jump in, which during the last couple of weeks has been too early. FOMO, emotions, right? Folks, emotions belong in your love life, not the stock market. All right. So we have emotions that play on us, and you'll find that the enemy on the stock market is not the stock market. Um, Not at all. It's the person in the mirror. You. You yourself are the enemy. The enemy is who said that? What was that? Wasn't there a cartoon character or something? Oh, I don't know. I think a pig said or something. The enemy is amongst us, and it is us or something. Anyway, it's the person in the mirror, and that person is the ego, fear, greed, fear of missing out, like FOMO, and what's the other one? YOLO, you only live once. These are all emotions that generally run our lives, right? I mean, love is an emotion, and love will move mountains and whatever. Um, and emotions will, emotions you'll kill for emotions. You will do, we eat emotionally, That's where most of us, I think, have problems, right? Weight loss, well, the emotion of enjoying that food. We're addicted to sugar and carbs and whatever. Um, it's very difficult to isolate emotions from. So I think our brains have two sections. There's the left side, right side. I'm not sure how that all works, but there's like the intellectual side and there's the emotional side. And I swear sometimes those two sides don't talk to each other. Sometimes we might know, right? We might know something intellectually, academically, we know the right thing to do, but emotionally, we ignore what the other side of the brain says and we go for it anyway, right? You know, um, as an example, as a pilot, I'm a pilot. There's this thing called get homeitis or get there-itis, which means that yes, I know that though I just did a brief on the weather is not good. I've got some storm clouds coming up to my destination, but I want to get home. I'm going to take off anyway. I'm just going to go. Well, hang on a second. Wait a second. Stop. What are you, kamikaze here? That's suicidal. A lot of little planes crash if they go into bad weather and instrument, conditions, and you're not instrument rated, and your plane is not, designed to go through thunderstorms or something. You can't do that. You can't let your emotions rule. And anyway, we talk a lot about that kind of stuff. We actually get right into that in our trading room. We talk a lot about that. In fact, I'm going to go into some of these questions here. I'm going to get into some of these questions here. Um, in answer to that question, for example, the pick of the day, which was that person was asking, when do we get in? So the pick of the day, and I'm going to get to that in a minute here. It is designed to be bought at market open. So the first thing you want to do is you want to see, is the market going in your direction? Look at the 1 minute chart. Let's say the pick is call options. All right. If you expect the market to go up, you buy call options. If you expect it to go down, you buy put options. Let's say the pick is a call option. And so at the market open, you want to wait a few seconds for the bid-ask spread to settle in nice and tight within 2-3 cents of each other. Okay. Now we got a price. Now, if the 1 minute candle, the pressure is to the upside, buy right then and there. Don't wait for the 1 or the 2 minute or 3 or 5 minute candle. You buy right there. If the pick is a call option and yet the first 1 minute candle is pushing to the downside and even the second and third down, 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 wait until that 1 minute candle starts pushing back to the upside, then buy it. You'll get it for a little bit cheaper. That's how you trade the pick of the day. Those instructions are actually, I believe, very clearly illustrated in the rules, which you get along with the pick of the day every morning. So, got to read that. So. All right, Lonnie says Queensland. You're in Queensland, Australia. Transplanted from the U.S. West Coast. Okay, cool. Let me see. Okay, okay. Let's get into some questions here. Uh, okay, I'm not sure. Any chance there is a prop firm that can take your live trade room trades with the trade copier? Due to work, I cannot trade at your times. I don't know what time zone you're in, Craig. We're not set up with auto trade. That's something maybe you can do. I'm not really sure. We don't have auto trade here. Right. Do you use the last hour or pre-market opens to determine expected direction on open? Absolutely. We look at the pre-market. So what we do is in the so for example with the pick of the day, and I'm going to get into that, or the signal or any of these things, we look at technical indicators and fundamentals. With the DayTradeSPY signal, there's an algorithm that kicks in there as well. We'll get into that in detail in a little bit. But we look at all of the inputs that we look at. So Aaron and I, we spend a fair bit of time in pre-market. So we do the heavy lifting for you so you don't have to. And that's the beauty of what we do. We do the heavy lifting. So if you subscribe with what we do all that pre-market stuff, analysis and all that. We look at the news that's happened, the news that's coming up. We see how it's going to impact. We look at earnings. We look at Twitter feeds. Oh, sorry, X feeds. We look. Don't you hate that when you always see that X, formerly known as Twitter? Oh, it drives me nuts. We look at all kinds of different things, and we look at a lot of technicals, deep dive analysis we do, and we get a really good idea as to where the market's going to go today and tomorrow. We're not that smart to know where the market's going to go a year from now, or 6 months from now, or even a week from now, We got a pretty good idea where it's going to go today, and that's what we look at. Yes, wonder list. Okay. Okay, and a lot of these questions we're going to address in the trading room because they apply to trading room type questions. That's where a lot of these um, and get answer. Okay, the 3-day rule on consecutive days, or you get suspended. Okay, so David, you're okay. So David's asking about what's called the $25,000 rule, pattern day trade rule is what they call them. What that means is this: if you have a margin account, which most, if not all, platforms brokers want you to have, that's what they allude to. The reason is because they actually make their money by lending you money to buy the equity, stock or instrument or whatever it is on margin. Okay. Even if you have $1 million in there, they will still take maybe say half of the money from your account, lend you the other half. You pay interest on that. That's where they make their money. Commission is secondary. So that rule says that unless you have $25,000 in your trading account, you can only trade in and out round trip 3 times in a 5-day period. That's to kind of suppress that gambling effect. You know what I'm saying? So that you're not going to blow up your account real quick. So now there's a way around that. Very easy. Get a cash account. Get a cash account. A lot of brokers don't like to give that, but if you press them into it, they'll eventually give you a cash account. Just ask for a cash account, and this way you can trade as much as you want as long as you have the funds in your account to cover your trades. And that's really what you want anyway. You don't want to be indebted to your broker because you made some bad choices. Okay, very, very interesting. So, all right. Uh, Yes, that is true, Bradley. Yes, he noticed that it almost doesn't matter whether you buy a call or put. It almost always seems that you get 6% profit every day due to the movement of SPY. Have you ever looked at that historically? And you're pretty much on to that, Bradley. So what we do is we do look at the propensity as to where the market will probably go. But you are right. SPY is actually very forgiving, and we're going to get into that a little bit here. Okay. All right, let me show you what we have here because I kind of want to get into this here. We actually have some real good programs, folks. No, actually, they're great. They're great programs. We got some really good solid gold, learn and earn, actionable plans that you can do, you can invoke right away. All right, you can get this right away, and it's only through DayTradeSPY. First of all, the inner circle. Every morning at 9:20 Eastern, no, sorry, just after 9 o'clock, we send out a morning market analysis, a very brief synopsis as to the way we see the market going. We also send a follow-up report later in the day. You'll also be invited to our Tuesday night interactive meetups at 8 o'clock, and we just discussed the events of the day, and these are interactive. You can ask all your questions. These sessions are recorded, so you have if you can't make it, you view the recording because we send out the recording right after the event. Now the cost $9.95 a year, $275 quarterly. All right, very affordable. Great way to get started for not a lot of money. Now we have the DayTradeSPY signal. This is the algorithm-based signal that you're going to get into your email and cell phone text. The idea here is to buy immediately within the first 2 minutes of getting the signal sent out to you 3 to 5 times a week. Buy immediately, put out for sale for 5% gain. All right, 5% gain. If it's not sold by 4 p.m., sell it at the market close. This thing's been going extremely well. $14.95 a year, $3.99 a quarter, $149 a month if you want to try it that way. If you don't like it, just let us know. In 2 weeks, you get your money back, 100% guaranteed. DayTradeSPY signal. Then, of course, the pick of the day, something that we've been talking about. This is that daily pick that you're going to get emailed to you just after 9 o'clock in the morning. Again, buy it immediately at market open. This is actually anchored in time. What we're saying is that the market goes up and it goes down. If we see that there's a likelihood of the market going up, we'll issue a call. If we see there's a good, strong chance the market's going to go down, we'll send out a put, right? And the idea here is to get into this thing and put in a 6% good till cancel order. If you have to hold it overnight, do so. We'll look at it the next day. But it's rare that happens. And we've been telling people just put in a 40% stop loss if you're really feeling comfortable with holding it overnight. $14.95 a year, $3.99 a quarter, Again, 30-day, 100% money back guarantee, no questions asked. You can't go wrong with our programs because we do offer these incredible money back guarantees. Our product of which is our signature product that we just that's the star of the show, if you will, is our trading room. And this is the best value, folks. If you know what calls and puts are, this is where you need to be. This is where Hugh, that's me, and Aaron, that's us. We are pro traders. This is what we do. All right. It's not like that, we do some other job during the day, and this is what we do on the side. No, no, this is what we do. And we host this every morning. These are interactive, learn and earn, fully narrated. This is where our strategies come alive. All right, this is where strategies come alive. $6.99 a quarter. Again, 2-week, 100% money back guarantee. I just been reading some of these while I'm talking. I'm reading some of these comments here. Justin M is just a texted in here. Says, I've been following you for 3 weeks. I turned $2,000 into $2,600, and I want to learn everything. Way to go! Way to go! All right, we have yes, Pogo. Yeah, we have met the enemy, and he is us. Pogo, that's it. Yes, yes. Thank you for that, guys. Thanks. Okay. When I say guys, I mean gals too. So, okay. Yes, okay. All right. Next up here, the Ultimate Training Workshop. The Ultimate Training Workshop. All right. This was an event that we had done some months ago. These are we recorded them. 11 recorded webinars. These are webinars about an hour and a half long each. We covered everything in these webinars, all right? Everything we do. We teach what we trade, trade what we teach fundamentals, money management, technical strategies. It's all there. Now, here's the funny thing about this. I remember this months ago. Eagle Financial Products. They are the company that bought us out a couple of years ago, about a year and a half ago or so. And they said that we're gonna do this special workshop. We're gonna I know you're selling it for $3,500, but we're going to give a special price of $995 for 2 weeks. I said, and we kind of argued about it. I said, you're giving this away for like $995? Are you serious? Are you flipping serious? I said to him, do you know the value of this thing? Oh my gosh, if I would have known this, I would have easily have paid 10 times the money that you're charging for this. Easily. I couldn't give you the money fast enough. No, we're gonna do $995 for 2 weeks. I said, okay, that's up to you. Doesn't matter to me. This is your baby. So, so here's the funny thing. All right, um, the IT guys that set this up on the website. Now, let me just check to make sure that I'm not talking through my hat here. The IT guys that set this up, they have yet to take this off of here it is right here, Ultimate Workshop. They have yet to take this off the website. Now, I'm just going to check to make sure. Now, a couple days ago, I saw it, and it was still there for $995. All right, you go to the website here, up at the top right corner. I'm going to go back again here. Up to the top right where it says Ultimate Training Workshop. All right, and click here now to learn more. Go down here, click here if you're interested. It's actually 11 recordings, which includes a Q&A. And you get to, it tells you all of the information that we give you here. Our various strategies, the Greeks, money management, how to build confidence, mental aspects of trading. This stuff is solid gold, folks. Repairing bad trades. You're gonna learn Aaron's 1 + 1 = 3 strategy, Fibonacci, Andrew's pitchfork. This stuff is unbelievable. And look at this. Let me see. I believe the price, unless they changed it, I can't believe it. They're still offering it for $995. This was supposed to have been taken off the website back to the regular price of $3,500 months ago. But the IT guys, they don't know, and I'm not going to tell them. Hey, listen, if I can give it to you for $995, fine. Okay. You want to jump on this. You're going to want to jump in on this. All right. Get this. Get this. You are going to have these webinars. There's 11 courses here. And you'll be able to have these for at least 6 months. That's what we tell everybody. We have to have an end date, but we've yet to cut anybody off. All right. There are people that have had this for a very, very long time. And this is actually the unbelievable workshop. All of our workshops, everything is right here. You can learn about a scalping strategy. You can talk about, learn all about support and resistance, our chart patterns. You can learn our bread and butter strategy. It's all there. It's all there. Anyway, that's the ultimate training workshop. Okay, I beat that to death. All right, $9.95, and that's what you want. All right, so let me go back to what else we're talking about here. And that is it. So I'm going to talk about those people who are new to options. I know there's a lot of new people online. If you are new to options, this is where you want to be. All right. What are options? Well, what we do, we day trade options, SPY options, period. That's all we do, SPY. Why SPY? It's the highest traded stock out there. It's affordable, diverse, liquid. You've got it all here. Huge profit potential, exciting trading. Options. What are options? Well, this is an instrument. Options are actually contracts. They are contracts with an options holder. You're an options holder, an options writer says, I'm going to give you the option to buy my underlying shares or sell my underlying shares. Gives the options holder the right, but not the obligation to trade the underlying stock for a certain price by a certain date. I mentioned these two words before, calls and puts. That's all you have to know. The funny names, I know, but if you expect the stock to rise, you buy a call option. If you expect it to drop, you buy a put option. Call up, put down. Options have strike prices. This is the set price at which the stock can be bought or sold when the option is exercised. They also have expiration dates. All right. We're not looking at buying or getting the stock. We don't want the stock. We just want the right to trade the underlying stock. Okay. Expiration date, the date at which the contract expires. Now, there are different, there actually, if you pull up an options chain, all right, which is like a chart of all the options, you'll see hundreds of options that you can trade on SPY. There's this thing called in the money. This is when the market price of the underlying security is above the strike price if it's calls or below the strike price if it's puts at expiration. Allows the options holder to exercise it profitably. And then there's the out of the money when the market price of the underlying security is below the strike price if it's calls or above the strike price if it's puts at expiration, then it becomes worthless. If you're 1 cent out of the money, you now have a worthless contract. Expires worthless. We generally like to buy at the money, which is in between in the money and out of the money. Okay. And of course, when you get into trading with us, you're going to quickly pick this up right away. Pros with options, flexibility. Well, it's very cost efficient, huge leverage, extremely high return potential, many strategies available. And I like it because it's fun and exciting trading. I like to make money. It's very fun, exciting. There's some cons. You do have this thing called time decay, which we call theta. So if you're holding an option, it's going to expire and it's going to lose this time value. It's kind of like buying an ice cube. It's going to melt on you over time. It's going to melt on you. And that's what's called time decay or theta loss. There's also commissions to pay. And yes, it can be risky. All right. If the stock does not move in your direction, you could be out of some pretty serious money. So that's why we go over a lot of money management techniques. We generally use this phrase here, one stock, one strategy, 1 hour a day. And folks, I got to tell you that over the years, we kind of figured out what works and what doesn't work in both trading and training. I like to think that we became pretty good at it after the last 14 years. It's like anything else you do. You do it enough, you got to get good at it, right? Why SPY? SPY follows the top 500 stocks. People sometimes say, well, how come you don't diversify? I say, oh, I can't think of a more diverse stock than SPY. All the sectors are represented with SPY. They're all there. All the sectors are there, okay? Efficient use of analysis time. I used to be with other groups in the past many, many years ago, and we used to be assigned our various sectors and companies to look at, and Sunday nights we'd get together, and of course, all day, Monday through Friday from 9 till 4, and then we get together on Tuesday nights and Thursday nights, and oh my gosh, do you look at your sector? Do you look at your stocks? Is there anything coming up? No, no, no. Look, with SPY, you get in front of the computer about 8:30 in the morning. You don't even have to do that. You can just get online at 9 o'clock and we do all the heavy lifting for you. But you don't have to analyze. You don't have to spend hours and hours analyzing. We do the analysis for you. And even if you were to do it yourself, you can generally, once you learn how to do this, you can get in front of the computer about 8:30 in the morning and get a very good idea as to where SPY is going to go that day. And you'll find that the moves are quick. You can earn your daily gains faster. I like to get in very early in the day, what they call the amateur hour. Hey, guess what? I make a lot of money in that amateur hour. Okay. Call it what you will, folks. That's where the money is. SPY is fairly reliable, consistent, predictive, and even forgiving. Somebody made a comment on the chat line here that even if you go the other way, you're probably still going to get your 6%, and that's so true. SPY is actually very forgiving. And you can make money going in both up and down directions. You don't have to, you don't have to just make money going in one direction. If you see that the stock market is going down, the economy is going up, if you see that, whichever direction that you determine is a very favorable direction for the stock market, you go in that direction, you pick up a few points, you made some money. Congratulations. On with the next trade and the next trade and the trade after that, right? That's how I make some serious money on the stock market. Why SPY now? Well, why not? Learn something new, stay mentally sharp. You would not believe the number of elderly people that we have on our system. And I'm talking about 80s and 90s. And some of these people are sharp as a whip. I talked to one gentleman a couple months ago. Oh my gosh, he was, I think, 93 or something. He could talk circles around me. Now, this is what happens, right? This keeps your cognitive skills sharp and you stay mentally sharp. Don't let your brain ever turn to mush. You might as well earn while you learn. Time's going to pass anyway. You might as well make money along the way. Huge profit potential for serious traders. If you are serious about making some serious money on the stock market, this is where you got to be. It's in the options, folks. It's in the options. But the profit potential is it's just astronomical. We have people making double-digit daily gains on the stock market just trading stock options. And I know some people that they're truly living the dream lifestyle. All right, and yes, it is achievable. It is achievable. I've got one friend. I don't know how many cruises a year he takes, but he seems to be. He's on a cruise right now. He always seems to be on a cruise somewhere around the world. What's he do? He trades options, right? It's exciting. It's thrilling to beat the market. And this is what I really like. You can pass this knowledge on to your kids, financial security. Financial security. That's what it's all about. It's very comforting for me, very liberating for me, knowing that my kids know how to trade. I don't have to worry about, oh my gosh, what if you lose your job? What if your career goes in the hole? What if AI takes over your position? What? You know, the financial insecurity out there now, I don't think it's ever been as bad as it is. I mean, let's face it, people have multiple careers now, and you can't even actually get into business. We saw through COVID when governments would close down businesses. I have talked to I have talked to 60-year-old men who are crying because all they've ever known was that family-owned little restaurant, Manhattan, that would cater to the office crowd, lunch crowd. They started working there when they're 17, 18, 16, and they've taken over from their parents, grandparents. That's all they've ever done. And then when COVID hit and everybody's forced to work from home and the whole foot traffic dried up and so did the restaurant business dried up. They don't know what to do. They don't know anything else. That's all they know what to do. And so now we know that that can happen, right? With it didn't affect us because we're still trading options. The stock market was still open every day. We're still making money. Now imagine that. Even if you have this as a backup, not your primary income, but if you have this knowledge as a backup, you can always go to the stock market and make your money. And you can pass this on to your kids. I love it when kids learn how to do this. Here's a quick comparison of options and stocks. Let's say you want to buy 100 shares of SPY. At $500 a share, it's going to cost you $50,000. Well, each contract controls 100 underlying shares. And let's say it's a $3 contract. What's going to cost you $300? Now, if the stock rises $1, your equity is now worth $50,100. $50,100, okay? And if the stock rises $1, your option with a delta of 50, this is a Greek, it's attached to it, that means your option is going to go up to $350. Well, what's your return on investment? Well, if you're owning the stock, your return is 0.2% versus 17% for the option. Now, which would you rather have? Obviously, it's pretty clear to me. I had determined that since learning how to trade options, I have never traded stocks ever again. Never. Not interested. Because first of all, I don't have to encumber $50,000 worth of equity, whether it's cash or margin or whatever. All I can, I mean, I can get into the same control for $300. Yes, I can lose the $300 if I'm not careful, but I'd rather take a risk on $300 than $50,000. And look at the return on investment. 17% versus 0.2%. Are you kidding me? There's no comparison here. Folks, I'm going to tell you right now, this is the place to be, all right? As this lady says, one stock, one strategy, 1 hour a day. And you know what? Learn from our mistakes. You're not going to live long enough to make them all yourself. That's what it's all about. All right. Before I get into the end of this session, I just want to see if there's any other quick questions. Quick questions here. Uh, yes, we teach you how to be able to determine direction yourselves. Yes, in our courses, whether it's the trading room, we in the trading room we talk about all this stuff. We discuss all of those things that we teach you that we don't we you don't just listen to us making trades. This is not a watch Hugh and Aaron trade show. This is where we actually get in, we analyze the markets. At 9:20 we get in, we discuss the stock, where it's headed, why it's headed, where it's going, what's the news that's going to affect the market. All those things we discuss. We completely vocalize our thoughts. All right, completely and you can ask questions. These are interactive sessions. You can ask questions, completely vocalize our thoughts. By the way, we celebrate any gain. Anybody who just chimes in with their wins, we ring the bell for them and congratulate them and stuff. Completely anonymous, and we teach you everything we do. So yes, you will learn. You should learn how to determine direction yourselves. And another question here, if I want to be more aggressive, should I just buy more contracts or should I just sell for a higher percent? If you want to get aggressive, Rod, buy more contracts, buy more contracts, but be careful. We talk about money management when it comes to that. We like to say trade small, trade often. But yes, if you want to get aggressive, definitely. And if you want to get aggressive, we also show you how to make more money on the options as well, not just 6%. But there are people taking 10, 20, no, I shouldn't say 20, but 5, 10, 10, 15, 12, 30, up the line. We don't go for the home runs necessarily. Once in a while we do. All right, once in a while we'll go for those home runs, but as a rule, the singles and doubles are going to win this race, okay? All right, what's the difference between programs 2 and 3? Let's see, program 2 offers another ticker than SPY. No, we only trade SPY. We only trade SPY all the time. I think what Fred's asking here is what's the difference between the pick of the day and the signal? Okay, so the signal can come at any time, and we generally have a trigger in the morning. So usually by the afternoon, if the signal has not triggered, it's not going to trigger that day. You get 3 to 5 signal trades during the week, and it's based on an algorithm. So it's based on different criteria than the pick of the day. Now, the pick of the day, Aaron and I actually sit down and we discuss that versus like a computer model, which is what the signal is. The signal is a computer model. Pick of the day is something Aaron and I manually determine. We send you the pick of the day before the market opens. It is designed to be purchased at the market open, whereas the signal can come at any time, and you would buy that within 2 minutes of getting the signal. So you should buy that right away. And that is triggered onto your cell phone as a text message. I believe so does the pick of the day, but again, it's just a matter of when you're going to be getting into it. Pick of the day, you're looking at a 6% gain. Signal, you're looking for a 5% gain. The pick of the day, you may hold overnight. The signal, you'll want to be out of it by the end of the day. Those are your essentially the differences there. All right, Fibonacci Fibonacci webinar is slated for May the 22nd, 11:30 Eastern Time. You'll want to watch the emails for that. All right, watch the emails for that. Aaron will be hosting that one. I will also be on too. All right, so you have to subscribe to the other items separate from the Ultimate Workshop. All of those those programs that I told you are separate subscriptions. But I'll tell you, a lot of people get the Ultimate Workshop. They go through that, then they join the trading room. All right, because then they're completely familiar with what we do in the trading room. They are not lost at all. All right. How much do 10 contracts generally cost? Say for the pick of the day. Okay, so let's say an option costs you $2.50. If you're going to buy 10 contracts, it's going to cost you $2,500. But don't worry, because you're going to get it back when you sell, right? All right, Tom J. I'm 87, having fun while I'm learning. Nice to hear that. Uh, I love it. Okay, another question. What is the best program to use if we can't watch you live since I have a job for now until I can trade full time? Jay, you know what? Get into the inner circle. Inner circle gets you, it's not a lot of money to get in, and you're going to get a lot of great information on that. By the way, folks, if you go to our website, you're going to generally find the more expensive, sort of what I want to call the rack rate pricing. But here's what to do. Email customer service at DayTradeSPY. All right, email customer service at DayTradeSPY and tell them, either set up a little conversation with Grant or one of the people there, or tell them what programs you're interested in and ask them, what's your special prices on your programs? They're going to give you the special price on the program if you email them. If you just go to the website, you might end up paying more than what you could, right? What you should. So email customer service at daytradespy.com. Tell them what programs you're interested in. We've got the inner circle. We've got the DayTradeSPY signal. We've got the pick of the day, the trading room, ultimate training course. And tell them what you're interested in. They will give you the best price, special price that they have. Okay. Folks, with that, gonna just let you go here. There is a trading room subscription page coming up. It's been a real pleasure, and thank you all for joining us. Let's get some music behind the dancers. I hope to see you online in the morning, folks. It's been a pleasure. Good night, everybody.
And the sun, be great at what you do. Give it all of you, and trust the process and keep your eyes on the prize. I can tell you what